Where do setups form? Okay, think about that for a minute. When you're looking for this idea that I'm sharing, the fair value gap, where would you expect them to appear in price? Obviously, I've been teaching you to run above an old high or relative equal highs. And if you're bearish, that would set up a scenario where the market goes up, sweeps the highs, breaks back down below the highs, short-term lows taken out with displacement, and then you go back through that displacement leg looking for a fair value gap to short into. That's pretty simple logic, isn't it? How would you draw it out in price? What would it look like? Well, you have obviously a level of relative equal highs, and we're just going to use that green line as an example of that. And price is moving towards it. Small little correction or so, and it runs towards it again. And then finally it runs through those relative equal highs. Okay. At that moment, as soon as it goes above it, you start panning back through all this price run in here and find the nearest short-term low, because that right there is going to be your trigger. It's not that it goes above this old relative equal high and then goes down below that. That's not it, folks. That's not it. You have to see it go below that and displacement with an energetic move, take out a short-term low. That's how you filter out these trades that may not be high probability. In your mind, you're looking for where's the trigger, because until it takes out that short-term low, there's nothing going on. There's no trade there. There's no setup there. Then when there's displacement, that displacement leg in price action, that right there is your foundation to the setup. That's it. Once you have that, then you can go into that area and look for the fair value gap. That's the logic. Now, I'm going to teach you another approach, but this is going to be the sell version, okay? Just reverse it for the going long idea. If you have an old fair value gap above you, okay, so you have an old fair value gap and the market's below it and it's trading up. Once it trades into that fair value gap, it doesn't have to completely close it. It trades up into it. Anywhere between here and here is good. Once it takes out the low of the fair value gap and trades in there, you go back through that leg and see, okay, here's what? There's that trigger. That's that shift in the market structure you're waiting for. Then you have the displacement leg. So once you have that, you can go back in and look for the fair value gap. That's the two entry strategies for this model. Visually, this is what you're doing. Okay? It's algorithmic. It repeats.